Hi everyone, welcome to Screw the Stock Market. Today we had a really interesting show. We hope that you get a lot of value from it. Our guest was Caleb Johnson. He is an apartment syndicator. He's a multifamily investor. He's done 5 deals so far worth about $9 million.
Right.
Very impressive stuff. And I think one of the things I really loved about him was obviously he brought God into as a central part of his approach to life and business. Aziz, what did you think of the show?
I thought it was good. It was very personal. He jived with me in the sense that he talked about how his motivating factor for doing all of this stuff, especially at a young age. He's currently in his early 20s. He did all of this just because he was motivated enough to want to take care of his parents, especially after he saw his mom struggle after surgery and trying to make ends meet at some point and having to work while still recovering from her major surgeries. So that, in a sense, really connected with me and jived with me. And the fact that he was just able to run with that and just build that up into like a $9 million portfolio of real estate investments in such a short time, that was really impressive.
Yeah, absolutely. And in addition to his story being inspirational, he had very practical, actionable things that you and I can do in order to start building mentorships, building relationships, and getting access to some of the best investment opportunities out there. So I hope you guys get a ton of value from it. Listen closely and enjoy the show. Thank you for tuning in.
I just wanted to take a quick moment to thank you guys for being such avid listeners, and also to give you an opportunity to participate in various investment opportunities with Alex and I. Some of the same deals that we talk about will be offered to you so you can put to action what you've learned. Just go to screwthestockmarket.com and hit the Invest With Us button at the top of the page.
Welcome, everyone. Welcome to Screw the Stock Market. This is the program where we discuss alternative assets outside of the stock market with the aim of taking control of our finances, taking control of our lives, and taking control of our futures. And today we have a very special guest. Caleb Johnson is with us today, and he is a multifamily real estate investor. We're really excited. His story is inspirational, it's practical, and there's going to be a lot of different lessons for us all that we can take. So Caleb, welcome. We're really excited to have you on the show.
Alex and Aziz, thank you so much for having me.
Welcome
I'm
to
excited
the show.
to be here.
Awesome. Normally, we always like to start the show with just the personal side. Who you are. Tell us how you got to where you are now.
So the way I got started in investing was through my parents, and not because they were wealthy or entrepreneurs, but because they were the complete opposite. So they had day jobs, and my dad's had a librarian position, so he's worked for the government for 30 years. My mom's an occupational therapist, I think going on 15 years now. And I saw the life that they had, and I knew I did not want that for myself. And that really got exacerbated when I was around 18, 19 years old, and my mom had knee surgery. So she had both of her knees replaced, and she was out of work for 3 months. And during that time, to sustain herself, she was going to live off of her savings. And at the end of the 3 months, she actually got to the point where she couldn't afford to continue to dip into her savings, but she wasn't healed. And so she was caught in this dilemma of, do I go back to work or do I take off more time and maybe just retire later? And she ended up going back to work. And honestly, guys, I would see her come home in tears, just crying because of all the pain she was in and the emotional impact that had on her. So that kind of pissed me off, and I wanted to help her financially. And again, I saw that I didn't want that to happen to me. I didn't want to get to 60 years old, 65 years old, and be forced to stay in a position that I didn't want to be because of some unseen circumstances. And especially, I'm seeing a lot of that now in the stock market. I just had a conversation actually with someone on a plane, and that weekend, I think he lost like 50% of his retirement portfolio. And it's, wow, man, I'm sorry to hear that. But yeah, and that's how I got started. And I started in residential real estate, and now I focus on commercial multifamily.
Very cool. So those stories are very powerful, right? And I think that feeling of maybe being trapped, of saying, okay, I got to go to work, but I don't want to, or I can't, or it's painful and I need more time off, is a totally reasonable thing that could happen to any of us. But there's a big leap between wanting it and getting it. So tell us a little bit about that story of Everyone says, oh yeah, I'd love to be, if I was a millionaire, I'd go out and buy an apartment building or something. But you said you weren't a millionaire. So how did you go about getting started there?
And looking back now, I've been investing for 6 years, and I definitely see why there's not more ultra wealthy, highly successful people in this space. Now there's a lot of them. 90% of millionaires got their millions through real estate. And so those are pretty good odds. But there's the reason there's such a barrier to entry to really be successful in this business is because it's challenging. And to share how I started was I got around free resources. So Bigger Pockets was a great one, YouTube, and I just started absorbing all of this free knowledge. And that kind of showed me what I could do with the resources that I had at the time. So being 19 years old, when I was 20, I bought my first property, and I met a mentor of mine, and long story short, I offered to clean his toilets at 2 a.m. for free, work for him for free, just so that he could teach me. And he told me, go ahead and read Rich Dad Poor Dad 6 times and call me back. And so I did, and we did that routine with Cash Flow Quadrant and then another YouTube video. And then he said, okay, Caleb, you're serious. Let's talk some more. And so I got around him, and he was a real estate agent. So I leveraged his resources to acquire the first property. And he had a lot of contacts as well. So the lenders, the contractors, and that first property was a fourplex. And I was able to acquire that with about $10,000 to $15,000. And I moved into that one unit, and I rented out the other 3 units. And that term's called house hacking. So essentially my tenants that I inherited, they were just paying my mortgage, and they were paying the bills and also paying me at the same time to live there. And that strategy is not always viable for people, right? If you're married, 2 kids, your wife might not want to move with you into a fourplex, but just with the resources that I had at the time, that's how I got started.
So now you said you bought it for 10 to 15,000?
That's right. That was the down payment. And so it was a 3.5% down payment, and the lender fronted the other 96.5%.
Nice. Which state was this?
This was in Arizona, a suburb of Phoenix. So it was honestly a C- area. And there's plenty of stories to talk about and investing in one of those markets. And so it's pretty exciting.
Do you still live there?
No, sold that. I think after a year and a half, blessed to sell that. And so 1031, the proceeds from that into a retail facility here in Arizona as well.
Beautiful. Okay.
Not bad, not bad. And how long ago was this? Just so that people have an idea.
I think we acquired it when I was 20, and I'm 25 today. So probably about 4 years since we sold that, 3-4 years.
So relatively recent.
That's right.
Now, okay, so now I heard you mention the word we. So did you buy that as part of a partnership, or did you buy that individually for that first deal?
I did buy it individually. I generally say we because what I do today, I do work with a lot of partners. And so depending on the deal, there's usually a partner or 2 involved there. So with that transaction, it was just myself.
Okay. Excellent.
Now, you were mentioning before that you leveraged your mentor's resources and connections to purchase that first property. Can you walk us through how you went about doing that? I think one of the biggest stumbling blocks a lot of people have is how do they make these connections? How do they leverage them when they do? What was that whole process like?
Yeah, Aziz, I think that's a great question. And to start off, so many people do want to get into this game, but they don't know where to start. And so to have someone that's been there, done that, and they can guide and direct you is so important and was really influential for me to get started. And it starts with adding value to people, right? If you can find something, a thorn in the side of someone that has what you have or has what you want, and you can help them with that, do it. And at the time, again, I was 19 years old, 20 years old, so I didn't have a lot. I could give him a commission, right? Or actually the seller gave him a commission. And so whatever that is, and whoever you're trying to connect with, find out what they're needing or what they're lacking and help them. And don't expect anything in return either. just give and give. And then eventually that will come full circle. And so that can be hard starting off. And that was just my own experience.
And what about raising the down payment? Because I know when I was 20, $10,000, $15,000, I would have cried. There's no way I could have put that together back then.
I'm
So,
with you.
like, I'm curious, how did you get about doing that?
I was blessed to have parents in my life, and they really instilled in me, first you tithe and then you save. And so you tithe 10%, save 30%. And since I had been working, when I started working around 15 years old, I had just been saving money. And I was a heavy introvert in high school, and I'm still an introvert today. But so I didn't party, I didn't go out a lot. I was a gamer, so I just saved money through high school. And when I was ready, praise God, I had the capital to move forward on that.
You're making me reevaluate my whole youth. I thought I was a saver, but apparently I clearly was not.
And it's funny you mentioned that because, I mean, I've had conversations with people who are at different stages of life, not 20, older than 20, further along in their careers. And sometimes they come to me and they say, $10,000, $20,000, I can't even imagine ever saving that much. And so there is definitely a certain amount of discipline and, I don't know, wisdom. What you just explained, I couldn't describe it as anything other than wisdom. Tithing and saving, those sounds wise to me. And so there's a certain amount of discipline and wisdom there that is maybe a prerequisite for getting into this world. One of the things that we've struggled a lot when we've done our own deals is what that minimum investment number is. And on one side, we want to be very open and inclusive, and we want to open it up to very small investment amount because we think this is such a great asset class that can help people build wealth. And it's appealing to open it up to smaller numbers to say, yeah, you've saved $5,000, you can get in on this. But at the other side of it is there's some real practical reasons why, for business purposes, there's some good reasons to actually keep that minimum a little bit higher. I also wanted to highlight how I love the story of how was it your mentor who tested you and gave you all these homework assignments and you were cleaning toilets and that kind of like humility check. I'll say it goes back to your answer to that question about adding value. But it's really hard when there's someone who is perceived to be above you, right? Because the temptation, I think, as someone who's getting started is to say, they don't need me. They already have money. They already have knowledge. They already have resources and time. And what can I do for them? And so I think for you, it was a really creative answer. It's like, whatever you need, like, I'll go clean toilets at 2 a.m. I don't know why they couldn't let you clean toilets in the middle of the day, but they seem to have a mean streak to make you do it at 2 a.m., but whatever.
Yeah. And Alex, I'll run with that. I didn't end up actually cleaning his toilets. That was just something I thought of the worst possible thing to do. And I just said, hey, I'll do this. And so that's all I had to offer was my time. And whenever looking for a mentor, I've learned it's really important. When you're just starting off or wherever you are, don't go for the Grant Cardones to be your mentor. There could be a lot of great points to that. I'm not saying you can't learn or glean anything from that. But what I found great success in is finding someone that's just 6 months, 18 months ahead of you. And so they can be that, they're just a little bit ahead of you, so you can really comprehend what to do and you can wrap your head around it and you're taking steps in the right direction. Because if I'm 20 years old and I'm just starting off and I'm going to Grant Cardone, that can almost be discouraging, right? Because he's got a net worth of over couple $100 million, and he's been doing this for, decades. And so start with someone 6 months or 12 months ahead of you. And if that first mentor doesn't work out, I think just owning a business is so important just to never quit. If you call them up and say, hey, I want to raise capital for you. I've had conversations with big operators and trying to find a mentor. And I've had to go to several different people and have had lots of conversations around that, trying to find the right one. And the right one just being the one to give me a chance. That's the right one when I was starting off. And it didn't always go as planned. So I ended up having to just be flexible and actually work with someone that was willing to work with me. And just know if you're trying to find that mentor or that partner, it might not be on the first call. It might be on the 20th or the 50th, but you just can't quit during that process.
I really love that point because, yeah, I think the temptation, most people, if you go online and you say, oh, I want a real estate mentor, the SEO and all that, those people who pay for the Google ads are going to be some of those big time kind of gurus. And it's a lot of times the very first thing that comes up is some $10, $20, $30,000 mentorship that says, yeah, I'll make you a millionaire. I'll teach you how to do it. And that might be a good thing to do. I've been exposed to some of those and it's good content. But I love that idea of just finding someone who's just a few steps ahead of you, because maybe those people might be at a point where an actual friendship can occur too, where with some of these other gurus and stuff, there's so much distance that a friendship, I think, is a part of a mentorship. And maybe you're right. You're in a position also where someone who's 6 months ahead of you can add a little bit more value to someone like that than you could to a Grant Cardone, because he's got all that infrastructure, all that whole team around him. So that's really a great answer. Thank you.
Yeah, that's really poignant. Also, I want to go back to, in terms of your story, I think we jumped ahead of ourselves there in the sense that you left us all with, you bought the fourplex. That was your first transaction. You sold it. Then what? Where are you now? What happened?
So sold the fourplex 1031 into a retail facility, and that was through a partner that I actually met at a real estate meetup. And then house hacked another duplex. And around 3 years into my investing journey, I had also done a flip. So 4 deals, and I thought I would gain residential experience knowledge for about 5 years and then transition into commercial real estate, because I knew commercial real estate was just where there were more zeros and so more meat on the bone for everyone to make. And so that's where real wealth was created. And so I knew I would get into that eventually, but again, thought I needed some more experience in the residential before I got there. But actually going to that real estate meetup where I met my first partner. Oh, go ahead.
I was going to say, before we go further, just to clarify for our listeners, can you define what you mean specifically by commercial real estate?
Yeah. So commercial real estate, specifically around multifamily, is 5+ units. So if you have a fourplex, that's considered residential, and especially as lending is concerned. And so commercial could be also retail, industrial, office, warehouses, and larger apartment buildings. And
so any apartment that has more than 4 units.
That's right. That's right. And so at that real estate meetup, I got around this guy. His name's Corey Peterson, and he was just such a great speaker. And he shared 2 things with me that changed my life. The first one was that you're going to be green regardless of when you start in commercial real estate. You could have 10 years of residential experience buying single-family homes, flips, and then you try to take that into commercial. You're going to be green, almost just as green as someone that's starting day one in real estate at all. And so start now, because you're going to be green regardless of when you start. And the second thing was he shared his first deal with me, just what the finance and the net profit was for him. And they bought this apartment building. After 4 or 5 years, they sold it, and he alone netted, I think, $2 to $3 million. And so I thought, okay, 4 years, 5 years, $2.5 million. I can't do that in residential. That math doesn't pencil, and especially on one deal. Right? That just didn't make sense. So after that point, I went all into commercial. And now today we've been blessed to own 5 assets across 3 states.
Nice, nice. So now have you been doing this as on the operator side, finding the deals, or have you been doing capital raising?
On the operator side.
Bringing in the investors.
Yeah, finding the deals and then the asset management piece as well.
Okay. Now, how difficult is it for you to find these deals? We've found that like the deal finding tends to be the most difficult part for a lot of people. You can always go out and find people to raise capital, but how do you go about normally just finding these great deals?
Twofold. The first is you could have broker relations, and the other piece is you could go direct to seller. And I'm currently doing both. I first started with broker relations, and that looked like going to LoopNet and Crexy. And everyone, let's say I'm investing in Arkansas, And so everyone that has a deal in Arkansas on LoopNet, I'm going to write down their contact information, email, phone number, and I'm going to call them up and say, hey, Aziz, this is Caleb Johnson with Red Sea Capital. Do you have anything in the 50 plus unit range in apartments? And so I'm going to build that relationship and call them every 2 to 3 months and continue to develop that relationship. And even on that first phone call, if they don't have an offering that's going to meet my requirements, I still want to build that relationship because something might come available down the road. And I have had offerings come available on that first phone call, which is a rarity. Don't expect that to happen. Again, it just don't quit. It's going to take some persistence to get there. And I've also had offerings come available that we've transacted on and closed on that came from having relationships for 6 months with these brokers. And we chased a couple deals with them. It didn't go through, but this one did come available. And since we moved quickly and we had that relationship in place, we were able to get the deal done. So that's the broker relationship side. And then the direct to seller side is I'm really starting that side of my business now, but you have to have some resources to find who owns the property. Usually it's an LLC, and then you have to find who owns the LLC and then do a skip trace to find their phone number. And that can be, you might pay 10 cents for a phone number and $100 a month for PropStream or something to find who owns these properties. And that's a lot more labor intensive. But what I like about that is you go direct to the guy who owns it. You don't have that middleman where you talk to the broker, he talks to the seller, and you're back and forth. You can get really into the weeds and just go direct to that seller on the negotiations as well. So I'm working on both right now.
That's cool.
Very interesting. Okay, so I guess I want to ask questions about both of those. Those are subtly different things. At the end of the day, you're still building relationships with people. With the brokers, especially, I guess, earlier in your career, but at any stage, from the perspective of a broker, they need to be very protective of their time because they probably get calls like that all the time. If you had to condense just a few quick tips about how to build a good relationship with a broker, you mentioned follow up every few months. You gave a little bit of your script there. I guess maybe more with the focus on relationship. Tell me a little bit about how you approach that relationship with a broker.
It is developed over time and with business people, so brokers, people that own a large company, your voice you can act differently compared to someone that owns a 30-unit building. You're working with mom and pop compared to the business. And so when you're with the business people, with the brokers, the script stays the same and my voice is monotone and it's professional. I still want to be professional with the sellers, of course, but with the larger corporations, it's to the point. These are the numbers. This is the facts. Move on. If the deal doesn't work, there will be another one down the road. Now and so that's something that you do with the brokers, and there's just a spreadsheet, and I get every 2-3 months, just follow up with them. And over time, those relationships do develop. If you visit a market, you're going to get coffee with these brokers. And so certain brokers, you'll just get a feel for that you can have a deeper relationship. But some guys, their personality is just that, give me the facts, move on, and I don't want to have really much of a relationship.
That's interesting. That's been my experience, right? Is I had never felt much of a relationship because of that kind of business sense. And I really appreciate the way you phrase that. That's okay. That's actually what these people might want, right? They're busy. That's what they need. It's just the facts, and they need some consideration to get on with their busy schedule. So that's really cool.
What about the actual owners? Because I know for a fact I receive tons of requests from buyers that are interested in my property and whatnot. But most of the time I just look at these texts and random emails I get and I just ignore them. So how do you break through that barrier and avoid getting like a jerk like me and just leave me alone? Not selling right now.
I think it's definitely helpful to focus on apartment building owners, right? So if I was calling single family homes, it's different because you're dealing with someone's home. You're probably not dealing with a financially sophisticated, highly sophisticated owner like you are with an apartment building. So I do find that a lot of those apartment owners, they're more kind of business focused, but it starts with a script. When I'm learning this and developing this now, and a mentor of mine, he shared a good quote that I hope I don't butcher. The difference between a lightning bolt and a lightning bug is one can kill you, but one word, right? The bug and the bolt is the one thing that changes. And so you can change one word in your script and get a completely different answer. And the script that I use for sellers is just, "Hi, Alex, this is Caleb Johnson. How are you?" And then from there, "I own an apartment near you in Oklahoma City. Alex, if I could make it worth your while, would you entertain an offer?" And again, keep it short, sweet, to the point. And I'm not here to talk about flowers or anything. It's to the point. Let's talk about business. And if it's not, that's okay. And I still want to develop a relationship a little bit more with those owners and really get to know their property. Okay, so you're not interested in selling. What is your debt structure? Do you own more properties there? Have you had any fires? What was your takeover like? And so you're developing those relationships, and that shows sellers that you are interested in their property, and it's okay that they don't want to sell right now, because you can come back to them in 6 months, and because you have that direct relationship with the owner, and you can call them up and go through that process and maybe glean more information from them.
Definitely makes sense.
Very cool. No, I think that's really smart. I like your approach because I feel like it's a really interesting balance of maybe, I don't want to say like salesy, right? But a script focused on numbers and follow up. And those are kind of sales tactics.
Mm-hmm.
But at the same time, I think my impression is that you're really good at building relationships too. And it's like you're doing sales, but with some humanity to it too, right? You're not those guys that are just blasting Aziz saying, "Hey, Yusuf," whatever. And it seems like it's a good balance, and I can see why you've been successful.
Thanks, man. Yeah,
Now-
praise God for that. I've had some great mentors in my life, and that really started with, I used to be in a multi-level marketing, and that was my first business, was a multi-level marketing thing. So that means you try to meet people and then bring them into your business, and they buy your products, and then you help them do the same thing. And so what I would do is I would go to malls, and I'm 18 years old, and I would just try to have conversations with people. Talk about awkward. It was horrible. But getting my teeth kicked in, it's once you just try to build those relationships, and it's all about the relationship piece. And again, I have had some great mentors in my life that have helped me along the way, and that's been huge.
That's
Very cool.
awesome.
Now,
Beautiful.
I've heard you mention God a few times. So tell us a little bit about how God fits into how you live your life as a businessman, as in terms of that personal side. I'll say my own just personal little spiel is, when I first got into investing, I was very much overcome with fear and anxiety. And Aziz saw me at some of those low points where I was just like, everything. And my answer was, okay, eventually I got to that point. It's like, oh, God's here. He's in control. And in the end, I think it's going to be okay. And that kind of gave me some stability to bring to this kind of, there's risk that we have to take. So I thought I'd just give you a chance, since you mentioned it a few times, share a little bit about how God fits into your approach.
Yeah, I love that, man. And I really appreciate that question. And that's first in my life. And so I really want to make sure that whenever you're working with professionals in your business, God comes first, in the sense that I'm not ministering to everybody, but planting seeds, and also wanting to make sure that my integrity is in line. That's a direct result of my character. And so everything revolves around that. And so I want to help people, benefit people, and make some money to give it away, because to me, giving ultimately feeds my soul. So that's a big motivator.
Yeah, I think that definitely resonates with both of us, just because both Alex and I don't think we're very money oriented as people, but we have other people that rely on us, and we worry so much about them and making sure that everyone else is taken care of in that sense. So that drives a lot of our financial goals and our financial drives. So giving is a big part of why we do what we do. And yeah, that truly resonates.
Excellent. Caleb, so we've talked a little bit about how you got to where you are. You shared some really valuable things. I really love your approach to relationship building, mentorship. What's next for you? What do you see in the next 5, 10 years? I'm really interested in particular because I have the impression you're not a total beginner, but you're still pretty early in your career. So I'm really excited to see you conquer the world. What's next for you?
It is. I love that question. And it is challenging to look that far into the future and see where I'll be. I feel like my goals will change in 6 months. And that's the joy of owning your own business. You just have to be flexible. And in 5 months, I'd love to just focus on my podcast, and I love interviewing people and having conversations like this. It's so just fulfilling for me, and helping other people, if that means coaching, just adding value to others, even if it's not for monetary gain. I do love investing in real estate, so I see the value of staying focused on apartment buildings just because everyone's going to need a home. We're seeing a big shift from office where people are able to stay at home and work from home. And so office, I think we're going to see a big hit in office, but apartments, again, everyone needs a home. So I see myself focusing on apartment investing and different markets. And additionally, I love to travel. So being able to have the time, and that's what success means to me, is having the time to do what I want to do, when I want to do it, with who I want to do it with. And real estate, God, fall right into that mixture, man. So as long as I have those, God primarily, but it'll be great.
Yeah, and I would concur with the apartment route as being the future. I was reading something just recently. I think they were specifically talking about like cities in the UK, London being a big one, and they're saying within the next couple of decades, they predict that home ownership is going to be drastically dropping and everyone will be renting for the most part. So apartments are the way to go in that sense. And it's clearly worked for you. What now, $9 million portfolio of real estate at this stage? Within just 5 years, that's impressive.
Starting
You're
with
well on your way.
$10,000-$15,000 investment.
Yeah.
Thanks, man. Yeah. Praise God.
That's quite a return. Yeah, man.
Yeah.
Very cool. Caleb, do you have any last messages that you'd like to share with our audience? Maybe some sort of an invitation to connect with you?
Yeah. If people want to get connected with me, they can check our podcast out called From Trial to Triumph, or they can visit my website, which is redseacapitalgroup.com.
Very cool. Thank you so
Awesome.
much.
Thank you.
Caleb, great to meet you. And this is a beautiful story, and we're really excited. I think this interview provided a ton of value for us. Thank you so much.
Awesome. Thanks, guys, for the opportunity. I appreciate it.